Everybody really liked that Boomer Candy title. I think I predicted it accurately because that one got like a massive amount of view. I mean, like massive relative to like what we usually get. Uh, but it was on the higher end. All right, so welcome to episode 119 of Farm to Markets. Today we are talking about pessimistic investing, Amazon's new store brand, and data breaches. There's always some naysayer when it comes to investing. You probably met at least one before. You know, like the people who think you're an idiot for investing in the stock market because they read a book by someone you've never heard of, who thinks the end is nigh and convince them to sink their retirement into some cockamamie weird investment. Or other people who don't trust the Wall Street casino and sit in cash at the bank instead of investing. Stephen McBride of Risk Hedge thinks these people are foolish, and his argument for investing can be summed up as pessimists sound smart, but optimists make money. In other words, stuffing money into the mattress or burying private booty in the backyard while stockpiling MREs will probably get you nowhere. While investing in the market and even investing in new companies or technologies nearly always is the smart thing to do. Do you agree that optimism beats pessimism in investing? Backyard while stockpiling MREs will probably get you nowhere. While investing in the market and even investing in new companies or technologies will always be the smart thing to do. Do you agree that optimism beats pessimism when investing?
Uh, Ultimately, yes. I think there is such a thing as toxic positivity. There's a lot of junk out there that you can invest in that gets a lot of hype. You know, it's all sizzle, no steak, really. So um, be at least informed in what you're investing in. But ultimately, yeah, I think positivity does win. Um, you know, when you're pessimistic in the way that this author is describing, yeah, I have known people like that who refuse to invest because they think, Wall Street's a scam that's going to take their money, or, they think, money's going to be worthless soon. So they just, sink their money into gold or something. I've known people like that. And I know that their retirements are not as good as people who just diligently invested their money into their 401ks and did that for 40 years and retired. Um, so I don't think betting on the end or betting on money being completely worthless or money on betting on a meteor striking the earth and everybody's in a Last of Us zombie apocalypse kind of situation or something is going to get you anywhere. When you invest in even just the S&P 500, you have to be an optimist. You have to say, I believe that America's largest and most profitable companies are going to continue to be that for the foreseeable future, and I'm going to get a return on my investment for that. Or when you buy real estate as an investment, you kind of have to be optimistic that that house isn't going to crash in value and somebody's going to rent it from you. So yeah, I do think optimism wins. Pessimism, maybe the one time the meteor does strike the earth, the pessimists can, dance on my grave. But the rest of the time, I think optimistic investing ultimately wins.
Yeah, I agree with what you said, Alex. I mean, you have to distinguish between irrational exuberance and being reckless. You can come up with a bunch of different scenarios, bubbles, meme stocks, that kind of thing. But I think what this article is talking about is just being an optimist in terms of investing in the economy, the fact that the world's going to be moving forward, that you're trusting good people to be good and companies to make good things. And in that sense, absolutely, optimism certainly beats out pessimists. We get the opportunity to talk to naysayers and end of the worldists all the time. And just to put it bluntly, they've been wrong throughout history. If you invested, let's just call the S&P 500, you invested in the market. If you today, you've never lost. It's at an all-time high. So kind of like what Alex said, if I am wrong and the end of the world is coming, I'm only going to be wrong once. Throughout history, we've never had an entirely a complete world breakdown. The S&P 500, the markets, investments have never actually gone to zero. So it's a good risk. I think the folks that abstain from investing generally they want to avoid risk, and what they need to realize is that the risk of not investing is greater. Invest in your future. The rule of 72, basically you take 72 and you divide by a reasonable interest rate. That's how many years it takes to double your money. So if you can get 7.2% on your investments, every 10 years it's going to double. So every year you don't invest in the economy and in stocks, bonds, mutual funds, ETFs, that kind of thing, you're losing on those compounding periods. And it's not the first or the second one you're missing out on, it's the last ones. So when you're at the point where you have a $2 million portfolio and every 10 years it's turning into 4 and then to 8 and then to 16, that's really going to have an impact on your long-term wealth. So absolutely. Invest in the markets, be an optimist. I think the world is going to continue to chug along, but if I'm wrong, I'll only be wrong once.
I like the term rational optimism. It's, as opposed to what is it? I forget, like blind optimism. Is that you can still have still be positive about the future of America, future of economics, while acknowledging that there are risks, but you take rational steps to protect yourself against those risks. So I kind of found that term while researching this, and there's actually a book which I added to my reading list, named called Rational Optimism, and I kind of like that idea. So it's that we can still assume that there's going to be challenges, things might be hard, but ultimately people are going to do things to move us forward. And to Drew's point is that statistically, the odds of like Lehman Brothers happening again, or asteroid hitting the Earth are incredibly low. So is that you have to live in the present, and it's just in investing is that we do a lot of things by statistics, and one of the things is that it's a lot more statistically likely that the market is going to go up versus the economy completely crashing and everybody's trading gold coins and chickens and whatever else. So is that the statistics just don't support that. Is that you can be prepared for that, but I wouldn't go put your entire portfolio in gold, silver, buy guns and butter, wait for the end, because most likely it doesn't happen.
Right.
So I agree. I think the guy summed it up nicely. I think pessimists, you can sound smart, and it does alarm people, but I think he's right. I think optimists do make more money. All right, next one. So Amazon is launching a new store brand called Amazon Saver, billed as the no frills brand designed to help consumers save money on their grocery bill. Amazon believes the new budget-friendly label will boost sales both online and in their physical stores. This follows Walmart's launch of Better Goods, a food-specific store brand hoping to deliver quality foods at lower cost than name brands. So far, reviews have been good for Better Goods. Other companies have launched similar brands to plan to soon. Is this basically about inflation, or do you think there are more reasons why store brands are increasingly popular?
I think it's two things. I think number one, inflation. Consumers got a lot more aware of what they were spending their money on when things started going up in price, and especially at rates that surprised them and that they didn't like very much. So all of a sudden, maybe that great value brand macaroni and cheese wasn't too bad instead of buying, Kraft or something like that. So I think, people started being a lot more aware of what they were spending their money on and cut spending where they could in ways that didn't significantly reduce quality but saved them some money. Second, though, I think a lot of these stores are looking for ways to cut out these national retail or national brands and instead go in-house. If you can sell a similar product that costs you a similar amount to produce, and you don't have to give a cut to one of these, large, food conglomerates, that does a lot better for, Walmart or Amazon's bottom line, if they're not having to cut in those other companies. So I think that's probably a way that these companies are looking to grow their own internal revenues, while also giving consumers something else that they want, more choice at a lower cost. So ultimately, I think consumers will probably win in doing this, at least for now. So I think those are the two primary reasons for what we're seeing.
I think that Amazon's entry into this budget-friendly grocery brand, it's it's not about them being charitable to their consumers due to high inflation. I think that's just the sheep's clothing that they're wearing. That's the way they want to make it seem. I think it really just boils down to taking customers away from Target and Walmart. They want to be competitive. And quite frankly, I think they're doing a good job. They're playing to their strengths. The Amazon platform, it's extremely convenient, as we all know. It's user friendly, and Amazon they're leveraging this to be a dominant player in the grocery business by bringing grocery shopping to its platform. They basically just come one step closer to being a one-stop shop. They want to create this Amazon, world where everyone can just go there and get all of their needs met. I think that's what they're doing. Also, I think they can probably carry this out pretty easily, considering how much data they already have on their consumers. In fact, I bet that Amazon already knows more about what I want in groceries than I do. So this allows them to focus on products that meet their customer-specific needs and keeping their prices competitive. And finally, I think we're also seeing a shift in brand loyalty. I could be wrong, but today's consumers seem to be more willing to trade brands for convenience. And I think Amazon's tapping into this shift by providing alternatives to shoppers that are willing to try this new platform. So I think that's what they're doing. They're trying to stay competitive, and I think they're going to pull it off.
Yeah, it's nothing new. Costco's had Kirkland brand for a long time, and that's worked out well for them. Also, I'm surprised Amazon didn't do this earlier, but they have been accused of a couple of times of basically just knocking off like other products that they find on their website, and then basically just reselling them. I mean, Costco's had, I think, at least in the clothing, or not Costco, but Amazon, at least in the clothing section, they've had like Amazon's like own brand for a while, and they've been accused in 2018. They're accused of basically just taking proprietary information that third-party retailers sell on Amazon, like looking at the measurements and the quality and the fabrics and stuff that they use, and then basically just going out and then making a similar product with that's slightly different, so not enough so they can get sued for it, but close enough to the third-party retailer that's selling on their site. There was some Indian company that was selling shoes on the site, and Amazon basically went off and made like a knockoff version of that. And sales from the original third-party seller of those shoes, they saw a pretty decent sales decrease when Amazon started selling, their knockoff version of the shoe. So Amazon has been at this kind of stuff for a while, but like so have Costco and Walmart, and it's pretty easy to take a product and throw your resources at it and come up with something that's similar and cut out all the marketing and the third parties to make it cheaper. So yeah, I think they're doing it. Other people have been doing it for a long time, so I'm surprised Walmart's just getting into it now, but it seems to work out. It seems to work out for other retailers.
The amount of Amazon boxes that comes to my house is it's embarrassing. And if now you don't have to go to the grocery store, I think that's going to be pretty powerful across the country.
Yeah, no, I bet it is. I just because I'm assuming I didn't read this part about it, but I'm assuming it's just coming from like, is it actually shipped to you? Like foods, like like cereal, that kind of stuff I get, but like bananas, apples, like produce, is that coming in a box as well, or are they shipping that from like a physical location? I don't know.
I think you can only get that stuff if you have like an Amazon, like a grocery store. They have, I think they call Amazon Freshes or something.
Yeah.
I think you can get that stuff if they're in your city, but like I couldn't order bananas off Amazon, but I can get all the dry goods from Amazon.
Yeah.
And they'll just deliver straight to my house.
Yeah.
But I think between Amazon and Walmart's, competition for delivery, everything, and then you can also now just do Walmart's free pickup or delivery services too. You almost never have to go to the store at all.
Yeah.
It's been pretty nice with two little kids.
Yes. The store pickup is also nice. I did watch a clip of Amazon or Jeff Bezos getting grilled by some congressional committee on if they're knocking off third-party retailers' products, and he was basically like, no comment. So wouldn't answer. Yeah.
I would imagine he's doing. I don't know if you guys have ever seen this, but you type in like, I want a new lunchbox or a new lunchbox or something like that, insulated lunchbox, and there's like 30 different brands. They're all Chinese names and they have the identical photograph of the same item.
Yeah.
Nobody complains until there's an Amazon version of that that lunchbox. So I imagine that's probably what they're just doing. But I
Yeah.
I hope they're not stealing people's products and relabeling them. But I imagine they're just getting a contract from that same Chinese factory that 30 other retailers are and doing the same thing.
Yeah. I'm sure it is. All right. Last one. So is that so you may have recently gotten a letter notifying you that your data was compromised in a breach. You're not the only one. In fact, the first half of 2024 is on pace to surpass the number of breaches from last year, which itself saw a 72% increase from the year before. And the exposed information is highly sensitive. So a national background check firm, National Public Data, so the national background check firm is called National Public Data, recently confirmed a breach earlier this year that exposed social security numbers of millions of Americans. How much should people be worried about like their data getting breached? And is it just part of life now, do you think?
So I'll answer the second question first. Yes, it is just the new normal. It's now part of life. Get used to it. As all of your records are digitized, there's an arms race between hackers and cybersecurity firms. And sometimes the cybersecurity firms are going to be winning, and sometimes the hackers are going to be winning. China just recently said they used a quantum computer to crack the most sophisticated encryption method ever devised. Now, whether or not they actually did, I don't know, but somebody will someday. And so now there's going to be a new push for even more secure encrypted, cybersecurity methods. Excuse me. I know personally all about data breaches and having personal information stolen. Long ago, I worked for the federal government, and the Office of Personnel Management was breached. And so they got basically all anything that was in an FBI background check, plus my fingerprints. So whoever that was got all of that. All you can really do about that, this is the second part, what can you do about that? Lock your identity, check your credit pretty regularly. Lock your credit, I should say, not your identity. And only unlock it when you're going to go borrow money. I don't really think this is going to go away anytime soon. And if you're concerned about the cost of, like credit monitoring services, chances are you're probably a member of like AAA or AARP, or you have insurance, for a home or an automobile or something. Basically, all these places offer free identity and credit monitoring services, or credit cards usually do too now. So there's tons of free or extremely low cost ways for you to monitor this. And combined with locking your credit, there's really not too much more that you can do. But it's pretty low effort, and unfortunately, it's probably just another little thing you're going to have to do, because in the world of digital records and internet connected everything, somebody at some point is probably going to get a hold of your information.
Yeah, I think it's a part of life. It's kind of like asking the question, am I going to die someday? And the answer is yes. It's absolutely going to happen. Your information is out there, whether you like it or not. The big question is, what can you do between now and the unknown date of death, or the unknown date of something bad happening with that information from happening? You can live a healthy lifestyle. You can do things to mitigate some risks. And when it comes to your data being in cyberspace, kind of like what Alex said is, check your credit. Go to your the credit bureaus and check them regularly. That'll be one of the first indicators of someone's trying to do something nefarious with your information, stealing your identity, taking out credit cards, that kind of thing. Use strong passwords. So strong and unique passwords. So not just, password 123, those kind of things, and have them different across all of your different platforms. And then you can enable two-factor authentication, which adds an extra layer of security. That's always recommended. Be cautious with your personal information. Really scrutinize the website or the platform that you're using when you're putting in sensitive information. Sometimes you can tell right off the bat if it's a scam, or if it looks funny. Other times you can't. So it's always good just to exercise some caution. Just don't be completely 100% trustworthy on the internet. And then also what Alex mentioned is freeze your credit. It's not hard to do. You just go to the credit bureaus, you freeze your credit. And then you have to be mindful and unfreeze it anytime you need to do a credit pull. Not that hard to do, but basically that stops the hackers at the source. So those are things you can do. Yes, your information's out there. It's spooky, but it's just part of our world. But it's just a matter of being safe while you're doing it.
You can tell when it's a part of our world when you start getting scolded for not taking appropriate steps to keep your data safe instead of, people who are actually trying to steal your data. The credit card, you call the credit card company like, hey, I think I might have gotten hacked. They're like, well, are you doing the things you should do to keep your credit card safe? It's like, hopefully, but there's no sympathy for you now. It's just that it doesn't matter that there's people like trying to steal your identity like 24/7. People at the credit card company are like, you should have been working harder. It's like, dang it. So that's when you know it's just a part of life, is when you start getting scolded for your own data getting stolen instead of everybody being like, these people are ridiculous. They shouldn't be stealing your data. So that's
Right.
so yes, it's a part of all right. That's it for episode 119 of Farm to Markets. We'll see you.